All right, what's going on, everybody? Welcome back to the channel. It's Millennial Trades. So we're gonna kind of look forward here and talk about what's coming up, or just kind of get a recap for this slight break in the markets that we have tomorrow, especially for the Americans. So happy Thanksgiving to everybody out there. We're also briefly going to talk about the Fed minutes that came out today. I didn't really trade anything. I traded this morning for I was out of the trade in like 5 minutes, but I didn't really hang around in the markets trying to trade the Fed minutes or anything like that. But I did read through some of them. And also, I get emails from a financial YouTuber named Mark Moss. And he came out with this email that I want to read to you guys. It's called "Why Crypto is a Scam, but Not Bitcoin." And the reason that one of his first reasons is absolutely hilarious, in my opinion. And I'm going to explain why I think that. So, that being said, markets were a little bit higher today because supposedly the Fed is going to reduce the rate of acceleration when it comes to raising these interest rates. You also have a substantial majority of Fed officials judging that a slowing in the pace of the Fed's fund rate increase would likely soon be appropriate. But what does that mean exactly? Let's read that one more time. It says the Fed officials judged that a slowing in the pace of the Fed funds rate increase would likely soon be appropriate. And this came out in the minutes today as well. What does that mean exactly, though? Does that mean we're getting 50 basis point rate hike in December or not? A lot of people seem to be banking on that idea. Why not 75 basis points? They have raised now for six concurrent rate hikes, right? Without stop. 4 of them have been 75 basis point rate hikes. So why not 6 75 basis point rate hikes if the goal is to get up to 6%? Now I'm hearing other Fed officials, I think Jim Bullard came out and said interest rates need to go to 7%. I think he said that earlier last week, made the markets tumble. So I'm trying to get more information about this, and I'm trying to understand the Fed's words, but it's very vague and it doesn't make a lot of sense. And I'm wondering, is it the mainstream media that's putting it into our minds that, oh, the Fed's only going to go up, or only going to raise by 50 basis points next month, or is only going to go up to 4.5 or 5%. And you have other Fed ghouls calling for 6% and 7%. It's so hard to know exactly what the plan is. And just because all these other Fed officials think, one thing, that doesn't mean Powell's necessarily going to act based on their opinions. So I'm trying to learn more about the power structure of the Federal Reserve, but it seems to me that Jay Powell, if he wanted to, he could raise by 75 basis points in December again, right? For the 5th rate hike now that's been 75 basis points. So they went 50 basis points, then 50 basis points, and this was back in early 2002, I think. This is why the market started coming down. I didn't really understand it at the time because I've never lived through this before. But then, later on in the summer when they started hiking by 75 basis points, it was making major news. I started to follow it a little bit more. Let's go to the home sales. We have new home sales information. Home sales in the United States rose by 7.5% to a seasonally adjusted annualized rate of 632,000 in October. And this is beating market forecasts of 570,000. But how do we know they don't lowball the forecast so that when the numbers actually come out, they look pretty good? How do we know that the numbers, are what they say they are? It's very hard to verify this kind of information, especially just on a time basis, right? We just have to sort of trust that this data that I'm getting from tradingeconomics.com is correct. And you had, sales rising sharply in the South and also the Northeast. And the Northeast happens to be where I'm from, Central New York. So I kind of went down this rabbit hole. And Central New York housing market is actually continuing to go up. The sales, the actual price of the homes continues to go up, right? But here's the thing. This is the catch, right? They explain this. They say the median sale price back in 2020 in upstate New York, where I'm from, was $166,000, right, in 2020. which you just can't make that up with CV19 and all that. And, it's 166,000 was the median price. I love numbers and numerology. Okay, so also in 2021, it went up to 180,000, and in 2022, it's at 195,000 is the median home price in central New York. Okay, but here's the thing. The actual how many homes are being sold, it continues to go down monthly. And it explains that in the rest of the article. Yeah, closed sales, right, in 2020 in October would have been over 1,000, right, closed sales. But in 2022, it's less than 900. It's 829 closed sales for October. So it does go to show you that with these headlines, the headlines can look really, really good, right? Like median house prices going up in central New York, or it says central New York housing market continues to post selling price gains. Looks really good, but actually, less homes are being sold in that area than were in 2020, which is because of the rising interest rates. And that's going to be with other parts of the country as well, and probably in other countries if those countries are raising their interest rates. We had some numbers about durable goods. I don't really understand the durable goods number, so I don't talk about it much, but it jumped 1% month over month in October. I think a lot of this has to do with military, because it says military aircraft was 21%, of the gains, this 1% gain month over month. So, the military too factors into all of this, the GDP. I want to always keep that in mind when I'm reading this stuff. So yeah, you got a ton of headlines here about the Fed. Dow Jones rises on smaller hikes. Russia oil cap jitters. You have New York banning Bitcoin miners that are not green friendly, or that go along with the New York City green agenda. And so of course that's going to that could spill over into other states. Other states might do that, right? It would make sense that we could see that next. So yeah, I follow the Federal Reserve on Twitter. They posted the minutes. And so I want to note here, right? This is kind of funny. The Federal Reserve opens the minutes, the discussion that they had last week, talking about ethics and how they have to, act with the utmost, ethical concerns for, basically the population, the consumers, and that they need to, be held accountable for their choices and the great responsibility that they have for, I guess the country, right? The nation. I wonder what people like Gregory Mannarino would say about that. I'm just sort of curious, but it's like, are these guys, is the Fed, are they the good guys, or are they the bad guys? Or is it that simple? And a lot of people kind of make it out to be, right? A lot of people will say that, we either need the Fed, there's no other alternative, or they'll say that the Fed is evil, the Fed is bad, we need to end the Fed. And so trying not to get caught up in that is something I've really been trying to focus on, because I don't even think we can begin to understand, what the Fed does, why they do what they do. They themselves say that they don't truly understand inflation. They're still studying inflation. And this goes back, a decade or more in different speeches and different Fed officials, so Bernanke included. And so these minutes, they go on basically just to recap, the last few months. They talk about the United Kingdom adding to market volatility because of their currency issues and the fiscal, extravagance and just all the problems they were having about a month ago. The Fed mentions this, right? It added to the market volatility, but left little net imprint. It just goes to show you how the UK used to be so powerful. Their monetary system used to be the dominant one in the world. And now they've basically been reduced to, even with all of their issues, according to the Fed, they barely have an impact on global markets or the American market. And I thought that was really interesting. They also talk about the US dollar appreciating against all these other currencies. And we've been following this, right? The dollar did make a pretty substantial high a few weeks ago, has pulled back. That's part of the reason the market has been rallying. And we were sort of trading that. I mean, I'm always trading against the dollar when I'm trading call options. So the dollar is definitely something we're going to be watching. I'm going to be paying attention to it going into 2023. Some people think, we're just going to kind of fizzle out and crash. Other people think the dollar is going much higher over time. So, the Fed basically promoting the dollar, our American currency. They also talk about the Japanese yen weakening, right? I mean, we followed that a little bit. I tried to follow it, but I guess their central bank stepped up and started lowering interest rates, I believe, going against the New World Order, the Anglo-American New World Order monetary system. They talk about our credit markets and everything and how everything's stable. I mean, this is what the Fed does, that, they want maximum employment and price stability. Those are their two main goals, supposedly, and a 2% average inflation rate over like 1,000 years. So you could imagine, right, how long we might be in 5% interest rate environments, 6%, 7%. It's possible they could drag this out a year, if not more. Why not longer, right? They got to make up for all of the years they were supposedly under that 2% average, which goes back, I think, over a decade. So yeah, the last thing I want to talk about is cryptocurrency and Bitcoin, because obviously with FTX, I could go down the FTX rabbit hole even further. It just gets weirder and weirder, and we know I don't need any more information to be convinced that there's some sort of criminal element to that story, okay? And so, but how is this affecting crypto overall? Because one of these days, that's going to be old news. Crypto will still be here, and even FTX, or I should say the FTT coin, I think it has a market cap of like several $100 million, if I'm not mistaken. So this stuff isn't going away, and so many people still believe in it, which is fine. That's cool. I'm not here to hate on anybody or anything, but it just seems to me that this stuff is extremely risky, right? I mean, I hold a little bit of money on Coinbase, and I have $50 worth of Bitcoin, I believe, that I'm holding with some cash on the side. But it's like, that's all I'm trying to put in there until, I need to probably get a wallet and learn how to do that, just to have exposure. It's not that I want to put a lot into cryptocurrency, but having $500 worth of exposure on Bitcoin's price increase or price comeback in the future, right? Probably not a bad idea to have a little bit of exposure to it if you can afford to, right? Maybe I really can't afford to. Maybe I don't want to. But right now I have $50 in. I've been holding this for a few months now, it gives me an excuse to actually follow Bitcoin. Because if I don't have money in anything, I usually don't follow it, if that makes sense. But Mark Moss, all right, this YouTuber, he sends, newsletters, and they're well written. They're as good as Anthony Pompliano's newsletters. So I read these guys. But this guy, Mark Moss, is really making the case for Bitcoin not being a scam like all the other cryptocurrencies. And the first comparison he makes, right? I mean, you're not going to believe this, right? He says there are different properties to Bitcoin than there are these other cryptos, right? Bitcoin has special properties, special traits, special utility that the other cryptocurrencies don't have. And he makes this comparison, right? He says, like, think about all of the metals, right? But there's only one gold. And so he's comparing Bitcoin to gold. And he says you have steel, aluminum, palladium, platinum, and silver. They're all metal, but they all have different attributes. But just like Bitcoin, when we compare it to other existing cryptocurrencies. So I don't know. I'm really wondering how he made the stretch from all of these industrial metals that actually have utility, actually have demand, actually have, industrial use. he makes all of the, he brings all of that up and then compares that to a bunch of freaking shit coins out there on the internet that provide no utility, that do absolutely nothing, that, with all due respect, is a scam. I mean, it's basically a pump and dump, and you have celebrities pumping and dumping these shit coins. There's so many of them. I mean, Solano, and I could go on and on and on. And how much this stuff was pushed over the years. Is Bitcoin any different? I don't know. Like, I don't truly believe that it is different. It could be. Only time will tell. But if Bitcoin went all the way up to 60,000 and these other cryptos went up hundreds and thousands of percent, and they've just totally crashed, billions and trillions of dollars in market cap value just incinerated within a year or so. Same thing with the stock market, right? But, at least the stock market, there's some fundamentals behind some of these prices. With these shit coins and the whole cryptocurrency sphere, to me, there's no comparison between that and gold to silver or gold to copper and all these other industrial metals that are very, very important. He goes on to say that another thing that makes Bitcoin unique is that it is non-regulatory. Right, but are they going to allow us to have a non-regulated currency or financial system? Like, we have to be realistic about that. And I mean, the regulators will never actually save the situation. They always come in after the situation, after the collapse. But it's like in these unregulated environments where there is just total collapse and pain and misery and blood in the streets, that's when the government sends the regulators in. So I'm just wondering, everybody says there's going to be this decentralized monetary system. Who knows if humanity could even handle that? You'd have to, I guess, go down that philosophical rabbit hole. I mean, as an alternative to the Federal Reserve system right now, I think I'll go with the Federal Reserve. At least these dollars and the prices are somewhat stable. In cryptocurrencies, it's all over the place for no reason whatsoever. They go up and they crash, and they will, a lot of people just think it's a big scam, and it makes sense. It kind of makes sense. So anyways, he made this video. He's really, these Bitcoin bulls or Bitcoin maximalists, right? They call themselves, if they're only into Bitcoin and no other cryptocurrencies. It's cool, don't get me wrong, and I totally understand where they're coming from. I just don't know if I buy into this. To me, it seems like you want to have gold, silver, you want to have bars or coins or jewelry. You might want to have cash, have plenty of cash in the bank, especially right now. If you're hoarding cash and trying to stack it, and in the metals as well, the metals, the coins, I do it all. I'm into all of that. I think we're going to be rewarded in these environments, in these high interest rate environments. We will be rewarded, but so will those who take advantage of these lower prices. So with that, I will see you guys on the next video. Happy Thanksgiving. Until always. All right, let me try that outro again. So as always, until next time, I'll see you guys on the next video. Happy Thanksgiving.